national security to global corruption. This is the Muckrakers on today's News Talk, TNT.
Hey everybody, and welcome to the Muckrakers on TNT. I'm Taylor Hudak, joined by my co-hosts Andrew Eborn and Basil Valentine. Today is Tuesday, August 6th, and we are one day out since the global crash in the markets. And so during the next hour, we will be discussing this global market meltdown, perhaps what triggered this. We'll be examining if we could be headed toward a recession or if we are already there. We will also take a look at economic events of the past and present, and also discuss CBDCs and much more. So we have a big show ready to go for you today. We thank you for joining us. I'm going to get right into this and hand it over to you, Andrew. So we know, of course, that yesterday there was a significant stock market crash. The Japanese Nikkei suffered its most significant one-day loss yesterday, and this was since 1987. So most significant loss since 87. Other Asian markets also took a hit. European stocks were nearing a 6-month lows. However, today it does appear that the Asian markets will recover. So there's been some speculation if this is going to be a larger crash or if this is just going to be a situation in which we are able to recover. So before we get into some analysis, I want to hand it to you, Andrew, as I said, to just lay out the facts, get everybody caught up to date as to what we're looking at here.
Thanks very much, Taylor. It's great to be joined by Basil as well, which is good. So let's have a look at the facts then. The FTSE 100 had its worst trading day in over a year, and the biggest concerns are about the US economy. Now, here in the UK, over 40 billion, that's 40 billion, was wiped from the value of the biggest quoted companies on the London Stock Exchange. The FTSE 100 index fell 2%, closing at 8,008. And the FTSE 250, which is normally a barometer of UK business health, that dropped about 2.8%. The sell-off basically began because of Wall Street due to disappointing jobs data in the US and poor financial results from people like Amazon and Intel. And investors, basically, they get very scared. And when they get scared, there's a sort of panic buying and selling and so on and so forth. And they feared that the US economic growth at 2.8% in quarter two might falter. And what they did, they blamed the Federal Reserve decision not to cut interest rates. The good news, however, is that today, as you hinted at, Taylor, the Japan's Nikkei 225 index, whilst it fell 12.4% yesterday, it's worse since October 1987, it's basically coming back. And it's gone up 10%, which is one of the biggest surges they've had for an awful long time. The yen has now stabilized at about 144 to the dollar. And basically, it's a historic surge they had. It's about 3,453 points in the Nikkei 225. So it's basically been a roller coaster on the market. And what is always fascinating about these things is if you look back at history, and that's what we've been doing. And I know Basil and you have been doing a deep dive into what the various historical crashes have been and what lessons may have been learned. I was looking within seconds ago, just before we came on air, at the FTSE. There was the usual sort of roller coaster where it went up a bit and then down a bit, and it's around the just over 8,000 mark as we speak. But it's going to be an interesting day, and people are going to keep their eye on it. But the good news is that Japan recovered accordingly, and quite a big recovery it was too.
Yeah, exactly. From what I understand, this is pretty typical for Japan to have a quick recovery. As you had mentioned, we know that this crash was triggered by the raising of interest rates in Japan, which had me questioning, okay, well, why now? I know that it was inevitable. They had to raise interest rates. I think they were in the negative zone for some time and then also at zero. So it was inevitable that this had to happen. But also this job markets report in the United States has also been referenced. It was mentioned on the media repeatedly that there was somewhat of a shock that the unemployment rate was so high, which was surprising to me because I don't find that all too shocking, but that's how it's been reporting. Anyways, Basil, any thoughts on the trigger to this economic crash? What do you see as one of the key points here?
Well, it was a perfect storm, really, and great to be with you again, Andrew and Taylor. A perfect storm of Japan raising interest rates from the historic low of 0 to 0.25%. And this impacted something called the yen carry trade, which is where people borrow money in yen in order to buy things in the United States. They, of course, suddenly paused that purchasing as soon as interest rates in Japan go up. But historically, we are, of course, dealing with record highs, both for the Nikkei index and the Dow. You know, the Dow is over 40,000. It was 1,000 points in the late 1980s. So nobody on Wall Street is about to go poor. There's been a lot of profit taking, particularly in AI stocks, which, although still strong, aren't going to yield the massive dividends in the short term that people hoped. So to put it all together, this multiplicity of factors started with Japan raising interest rates in the middle of last week. That raised eyebrows, but certainly didn't cause any panic. Japan had to do so because the yen had fallen about 20% against the dollar and was in danger of going through the floor. So they finally had to increase interest rates after 30 years of unbelievably low interest rates in Japan. They've had this very loose monetary policy since the mid-1990s. The raised eyebrows then turned into a more furrowed brow on Friday at the disappointing US jobs and manufacturing numbers, although still some way short of being recession. And then you bring those together on Monday. Of course, the United States wakes up after Japan. Japan stocks have taken a fall, and the whole thing becomes a bit of a downward spiral with a lot of profit taking going on. I should emphasize, a lot of people deciding, well, we've had a jolly good run for the last few months, last few years. In spite of COVID and everything, the market continued to power ahead. So people decided to put their money in their pockets, basically, and wait and see what happens next. So these market corrections are inevitable from time to time. We shouldn't regard this one as anything like the Wall Street crash of 1929 or even Black Monday in the 1980s. The five factors people are looking at in general being a scare about potential for growth in the United States, although the United States, of all the major developed economies in the West, has been growing far faster than Europe, Canada, or Japan. Concerns about a policy mistake, in other words, that the Fed didn't cut rates last month. They've been focused on keeping inflation down, on pleasing Main Street, as they say, rather than Wall Street, with higher than usual interest rates. Then there are the technicals of the economy itself and political aspects, both geopolitical, with the potential for a widespread war breaking out in the Middle East, and domestically, because the surging in the opinion polls of Kamala Harris has led some investors to think, of course, if she wins the election, she will be less favorable to corporate America than Donald Trump. Donald Trump would mean another round of corporate tax cuts, everybody rubbing their hands at the prospect of that. So, you know, all these things have come to play simultaneously. But as Andrew said, markets in Europe have to some extent rebounded this morning.
Yeah. I think it's always just helpful, as Basil's made some excellent points there, just to put the stats on that as well, because as he pointed out, July to August, the US stocks index, basically, it did hit all-time highs. It was led by the AI investment boom. And we talk about history repeats itself. And I always say history repeats itself because we don't learn the lessons from history. And we remember about the tech booms beforehand, the boom and bust, and everybody getting terribly excited.
How much did you make, Andrew? Back in the
I bought a whole
internet bubble,
Rolls Royces, and a whole stable full of horses. It's always a joy, and some fine whiskies to share with Mike. So all of those are really, really good. But the key to it, and that's why I say about sort of history, if you look at that sort of stuff, and it was Goldman Sachs predicted that AI is basically going to cost about 300 million jobs as it's going to replace people, but new jobs will be created. So we always need to do that. And as you know, I speak around the world about AI, talking about the benefits, but also the huge risks. And I point out it's perhaps our biggest human achievement, but also potentially the biggest existential threat. So we need to look at that. So it's technology giants like Apple, Microsoft, Nvidia, they all reached historic levels. And the US economy and job market, the initial optimism, despite the sort of slowing down of the economic signs, there was a disappointing job report. In July, 114,000 jobs were added, but it was predicted there'd be 175,000 5,000 expected. And normally what happens as soon as they're then disappointing results, the market reacts viciously, if you like. It instantly has that sort of side. There was also unemployment, as we say, that rose from 4.3% from 4.1%, again indicating a recession risk. So that is looking at that sort of side and the sort of relevant impact that has. But it always astounds me. We talk about history and we talk about looking back at this sort of stuff. And I tapped into ChatGPT today about investment and that sort of stuff. And it warns about all these risks and it warns about the volatility of the market. And we still don't learn the lessons. I find that extraordinary. Taylor.
Yeah, exactly. And if you look throughout history, that is definitely supported with your statements. But I do want to point to a very interesting segment that I saw was broadcast on Fox News Business. There was a gentleman, Jeff Sika, I believe he is some sort of economist or economic expert, in which he did discuss further on the employment markets within the United States, which again, just as a reminder, was of course being stated as one of the reasons as to what led to this market crash was this very disappointing high unemployment report of the month of July. He stated the following. Again, these are his words. I just want a reaction from you both. I'll first start with you, Basil. But first of all, he stated that there's a false belief that there is strength in the employment market in the United States. 1.2 million Americans, U.S. citizens, had lost their jobs and they were replaced by 1.3 million foreign-born or illegal immigrants. And he cited that this is coming from the U.S. Labor statistics. So any thoughts on that element? I was actually quite shocked to hear this in the corporate mainstream media, but do you think that there's any merit to that? And do you have anything to elaborate further with the point that he had made, Basil?
Well, to just switch briefly to Canada, Canada's economic growth is driven entirely by population growth, and real GDP per capita per head has actually fallen in Canada over the last 18 months. It is a not dissimilar situation in the United States and indeed in the United Kingdom. One very quick way for governments to make economic statistics look better is to import more people, because more people simply means a bigger economy. Obviously, that's what the Biden administration have done in the United States with their open border policy to the south. Generally, it's regarded as being good for business because it keeps wages down, particularly at the lower end. I mean, it is, in fact, at the lower end of the income scale where hardship is always felt at its keenest, and that is particularly the case at the moment. But one of the reasons why the markets have got the jitters is that weakness is migrating up the economic scale rather than the so-called trickle-down effect of wealth cascading through economic layers to those worst off. What's actually happening at the moment is that the crunch, the bite, the squeeze on living standards being felt by those on the lowest wages in the United States economy, that is moving north into the middle class. So, yes, of course, population growth of immigrants helps to feed that. That's why traditionally labor unions were opposed to mass migration, because it has a negative impact on wages. And at the end of the day, it's up to workers with their spare money to buy the goods and services that the corporations produce. And if people don't have any money in their pockets to buy anything, that's the long-term structural problem that some people say is behind all this, and that will lead to some sort of major global crash at some point in the future. That's what the doom mongers are always saying. But at the moment, we're dealing with effectively a containment issue, for which the Fed bears some responsibility, because they had the opportunity to cut interest rates and they didn't.
Excellent insight, Basil. I do need to cut for a short break. When we return, we will continue this discussion on this recent market crash, as well as discuss the potential rollout of CBDCs and economic history, both past and present. So that's what we'll be discussing after the break. You're watching the Muckrakers on TNT. Stick with us.
From weather and traffic reports to news of political developments, we turn to journalists for the information we need to live our daily lives.
Journalists around the world provide the news that is essential for democracy,
for personal freedom, and for safety and stability.
Yet their ability to report freely and safely is under attack like never before.
Too many journalists are paying with their lives. They face exponential risks and they've already paid a heavy toll.
Death threats, online harassment, and physical attacks
are becoming a daily experience of journalists in all countries.
We just want people to be safe, to be able to get our readers the information that they need to make informed decisions.
They checked my phone and realized that it was Pegasus. I feel myself like I am naked at the street.
These charges were politicized from the start.
Facts win. Truth wins. Justice wins.
C'est énorme pour moi d'être là, d'être libre, surtout que je ne m'y attendais pas du tout.
Stand with a free press.
Stand with journalists whose reporting won't be silenced. Press freedom is your freedom.
Lies. We're being told lies by greedy foreign developers who want to build renewable energy projects in Australia. They are not good for the environment. Thousands of hectares of productive farmland will be cleared and native wildlife will die. These developments promise clean energy, but at what cost? Let's help protect our communities and their irreplaceable way of life. Let's rethink renewables. Take 2 minutes to learn the truth about the destruction they cause. Go to letsrethinkrenewables.org.
You're listening to the Muckrakers on today's News Talk, TNT.
All right, everyone. So we left off with a discussion about how immigration could impact economic policy as well as job reports. And immigration is a big issue both in the U.S. and the UK. I know it's an important factor in the upcoming U.S. election. It's obviously a very hot topic in the UK right now. So it's interesting to see this sort of surface in the media in the context of this recent market crash. So Andrew, I'll pick up with you here. What are your insights on the media's role in its coverage of this market crash, as well as inserting this issue, very hot topic issue, as I said, of immigration to the mix?
It totally is. It totally is. And those are both really hot topics that we had during our election here, which was decided on July the 4th. And they were all banging on about immigration and stopping the boats. And they were all banging on about the economy. And as Basil wisely pointed out, you need to have people with money in their pocket so they can spend. That's what oils the wheels of finance in this sort of way. And it's good to see Basil wearing his old college tie, Trinity College tie, if I remember it rightly. And it still fits him, which is always a good sign as well. But the point is this, is that history, despite their collective expertise, are apparently destined to repeat history. You know, there's always irrational exuberance, which is then followed by equally irrational despair. And you look at these patterns throughout history, and people are trying to look to blame. And I would again urge caution about the immigration side. We have a tinderbox over here. Things are spilling out into the streets where they're blaming immigration on the downturn, if you like, of the economy and so on and so forth. And the reality is that we need a certain number of immigrants to do certain jobs, which to make things like the care industry and so on and so forth run. What we need to have is that sort of honesty about what drives these things. And I do think there has been sort of irrational, if you like, and it is irrational sort of exuberance, if you like, about certain stocks. And if there's no substance to those stocks, then eventually there's going to be equally irrational despair. And the best advice is to look. People have a sort of balanced portfolio. You try to ride the storm. The immediate correction, if you like, of what happened in Japan could be very indicative of what's going to happen in other markets. So the key is not to panic. But I wonder just one thing, which is sort of an interesting point today. People are talking about the current economic and political climate. If we were to have an election again in the UK with all the troubles that we've had and all the riots and everything else, I can almost guarantee that Keir Starmer and his bunch wouldn't get in again.
Wow, that's really interesting. Right when you brought that up, it reminded me of the fact that there's a lot of discussion now if Starmer will even survive a full term as prime minister. Very interesting points that you bring up. But let's take it back to Japan, the economics, this market crash. Basil, I'll hand it over to you before we get into a broader discussion about the historical context and recent economic crises and how those have been handled. Basil, any other thoughts or analysis you want to share with the viewers right now about what has taken place in Japan? Perhaps your insights on the Fed cuts and that perhaps being a bigger problem for Japan.
Yeah, well, the Japanese stock market has rallied considerably. Markets in general are very jittery, particularly when they're at record highs. So we shouldn't be surprised about what's happened at all, really. And as always, expectations against reality is what markets react to. As Andrew said, America did actually put on over 100,000 jobs in the latest figures, but it wasn't quite as many as was hoped. So that's why people, react as dangerously as they do. And also, you've now got the added cryptocurrency factor, and Bitcoin came off a considerable amount on Friday and Monday, and does begin to look like one of the things that people